Welcome back to the channel. Today, let's look at the worst case scenario for the Bitcoin bottom price and the Bitcoin bottom time. Let's match both of these analyses together, the time and the price, and give us the worst case scenario. So before you hit that like and subscribe, which I all know you will do with the bell notification icon, make sure you got your camo on. There are still a lot of Bitcoin bulls out there that just hate the thought of the price going down any further, even though it's already down 70%. Get your camo on, hit the like, subscribes. Let's dive in to the video looking at the analysis on the price and the time for the worst case scenario. There will be another video coming out with some of the best case scenarios, so chill your pants before we get to that point. Any other indicators that I look at or analysis on how I get to the point, links will be in the top of the video description. We've got the Gann swing indicator and of course our courses and memberships for our students over there. So that's the Bitcoin bottom price intro done. Links are down there. Important points to note about what we're doing next. Only 2 cycle data points to work with. This is the macro stuff. 2 major ones. Obviously we had the peak in 2013 and the peak in 2017, and now we have the peak in 2021. So once this data is all complete, over the next couple of years, then we'll have 3 major data points. And we want more than 2, but this is all we have to work with so far for Bitcoin, that is. This is only the worst case scenario. It does not guarantee that it will happen. Hopefully it doesn't happen. Of course, we're just looking at the worst case. These may sound like extreme numbers that we're looking at as well. So remember, this is just the worst case. I will do a video coming up, something around the best case scenario. So we'll take a look at that as well. What is it that we're looking at today? So worst case, I'm going to do this in months, keep it macro. There's going to need to be some tolerances on this, of course, with price and with time. We're looking at the macro here. Nothing happens exactly. So yeah, we just keep some tolerances. How much longer until Bitcoin reaches the bottom? Lowest price possible, not including zero. Of course, it can go to zero in terms of a percentage from the all-time high. So some simple ones. And then we'll look at lowest price possible, not including zero, using Gann extension and Gann retracements, and then also support and resistance levels. We want to see in terms of the price if we get any sort of clusters, because that's going to give us a more definite or more significant price to look at. How long until Bitcoin price tests all-time highs? So I know we're looking at the worst case to the downside in terms of time and price as well, but I want to have a quick look at how long until we reach that new all-time high again. Let's look at the worst case scenario until we get back to that price, because look, these are some of the major questions that you guys keep asking in the comments or our members or on Instagram. When I do Q&As over there, links to Insta and Twitter are down there. Don't get scammed. All right, just use the officials. There's some of the major stuff. You're like, how long could this take? And what I've seen is there are a lot of people that are dollar cost averaging into altcoins way too soon. Of course, in my opinion, it's what I've seen in the previous cycle and what happened in the cycle before that. So I hope people still have money left when the market starts to pick up again, which is why I'm looking at the worst case scenarios here. So you can fit this into an investment plan to plan out maybe the next 6, 12, 18 months and make sure that those funds really do last. How long does Bitcoin remain at the bottom? And so you're going to look at that in a little detail and go into it in more detail in future videos as well. So let's crack on with the videos now that we've got an idea of what it is that we are looking at in this video, what questions we want to answer. That's what we're getting to today. Let's start things off slow with a chart that most of you guys are familiar with. This is something that I posted out in February of this year, 2022. So it's the little yellow arrow up here. This is our Bitcoin cycle low. So just starting with something that we have looked at before. We're just looking at how long until we get to this low. Let's look back at the last couple, 51 bars. So what I'm looking at here is the low to the low. This is basically looking at like a 4-year cycle. Now we did do this in a recent video, so I won't go too much on about this, but we need to know this to get to those worst case scenario prices or that timing in this regard, in this case. Low to low, 51 bars. That's what we're looking at here because I've got these vertical blue lines. 51, we're looking at a monthly chart. So 51 months. That, in my calculation, is just over 4 years, low to low. All right, next one, 47 bars, low to low, just under 4 years, 1 month under 4 years. Next one is still in progress. So I'm looking at 48, just to give us a round number here. Worst case, worst case would be 51. So let's drag this out to about 51. That would bring us out into March of 2023. And best case, which I said I would do another video, but just to throw a tiny bit of hopium in here, we've got 47, just looking at what the last only 2 cycles have done, that would bring us into November of this year as well. Now, there are some disclaimers to this because you could get a low price like we saw, and this is only just looking at the index. This is not on a particular exchange. We got a low in January of 2015, but then we had a slightly lower low on this index only. On most exchanges, that low was actually higher, but the price was still down trading at those lows. And that will help us answer the following question. Question number 6 here. How long does Bitcoin remain at the bottom? Because we can hit the bottom and we can remain there for several months, which gives us time to dollar cost average. So 47 bars, I'm using this low because it makes more sense when we look at all of the cycles within cycles to then help us calculate out the larger cycles. So if we were just to use this level here, that would then bring us out to a 40 bar short-term low. So low to the next low was 40 bars. But we're using this 47 best case, and we're here to look at the worst case, 51 bars, March of 2023. Does that work with our cycles within cycles? So there's another low. Bring this out, that's 21 bars. So it seems a little bit too long to go out that far. Having said that, it's not impossible. We have seen 19 bars from a significant low to another significant low, which you can see here on the pink arrow. These are monthly swing bottoms, so they might not look like much on a chart, and you might say that they're not that much, but at the time they are quite significant in terms of price reaction and timing at that point in time, meaning, we've been going up for quite a period, and all of a sudden you get 2 red months in a row, which is quite uncommon for that whole period of next nearly 12 months. So it is a significant low in that regard, according to my own analysis. That's how I'm analyzing these markets, cycles within cycles. So that's 19 months. So it's not impossible for it to be a 21-month low to low, but I think it might be a little unlikely, maybe more towards later this year or early next year as a possible worst case scenario for that low. So we'll just bring this back to 15, and that sets us up at September. So far we have 1 point at March of 2023. So now we're counting the quarters. So from the peak of the markets to the lows. So we go to the peak, to the low. We're looking at 5 bars in this case, or candles, because we're on a candle chart. So 5 times 3, because we're looking at quarters. So each of these candles represents 3 months, 15 months. So we've got 15 months top to bottom. Go from this top, 5 bars would then bring us out to about January. Now, this is essentially looking at the same thing as this 4-year cycle, but it's just looking at how many quarters it took to get to that bottom. And you can see that it's for the last 2 cycles anyway, that they're pretty close. You had 5 quarters down, 2 quarters sideways, and then the third one tried to break out. So we had 4 quarters down, essentially 5 because it was slightly sideways. Nothing much happened in that 5th quarter. Broke out, came back down for 3 quarters, came back up. So it was in a trading range for 1, 2, 3, 4, 5, 6, 7, 8 quarters, which didn't feel like a trading range at the time, but looking back on it, it does look more like a larger trading range than those first 2 quarters, which ended up being about 4 months where it traded between 3 and 4 grand. So you can look at 1, 2, 3, 4, 5, 6, 7, 8 quarters in the trading range before it broke out. So that's going to help us answer number 6. How long does Bitcoin remain at the bottom? Think about that. 8 quarters, 3 months each, quite some time. So from the top to the next low, similar to what we just looked at in terms of our 4-year cycle low, we were looking at 4 to 5 quarters. We're now we're into our 3rd quarter down. If we go to those 4 quarters, well, that leads us out into quarter 4 of 2022. Worst case scenario, maybe quarter 1 of 2023. Now, this is the worst case scenario. So let's do a worst case scenario and look at how many quarters was it from the previous cycle top to the COVID crash low, because that low was very close to the previous low. And we are looking at worst case scenarios here. And there is all the possibility that we get something else like that. And of course, we just wanted a worst case scenario. So to that low, 9 bars, which are 3 months each, 9 threes, 27, just over 2 years from top to bottom. If we were to do that this time, remember, I think they are extreme numbers. I don't know if it's going to happen. I don't think it'll happen. 9 quarters brings us out to January of 2024. So that's to reach one of a next major low, just like the COVID crash low was. That was a very significant low, and also the crash low in December of 2018. So 9 quarters from the top of November 2021 brings us out to January 2024. Not here to say that it will happen. We're just looking at the title of worst case scenario. So that's quite some time away. Worst case scenario in terms of how much longer until Bitcoin reaches its bottom. Well, we just looked at that there, and counting from this month, it's early in July, going all the way to January of 2024. That's 18 more months. Now, even I think that's a little bit ridiculous looking at it in terms of a worst case scenario. So I'm going to use March of 2023. That's another 8 months from this point in time. Worst case scenario. We do have some best case scenarios coming up, but I think probably towards the first quarter, maybe early second quarter of 2023 as a worst case scenario at this point. While we're on the topic of timing, let's answer number 6 so we can get to price. How long does Bitcoin remain at the bottom? This is going to help us for a dollar cost averaging so that we can structure out our deposits into the market. I don't think we have to get all in on that major drop and then that's it. I think we do have a lot of time. And the last 2 cycles have shown that even if we didn't get that exact low at $3,100 or at that exact low of about $150 in the previous cycle. So just using a timing ruler here, this is the first month, 2, 3, 4, 5, 6, 7, 8, 9, 10. So if we just measure these out in terms of months, you can see we had quite a long time in that trading range. Although the trading range was about 100% from top to bottom, there was a lot of price movement in that, but timing about 10 months. Same deal over here. We had about 6 months for that range. This is in the previous cycle. And then there are another 2 sectors of distribution. And then we had accumulation, and then there was a reaccumulation before the breakout. And the previous cycle looked very similar as well. A distribution, an accumulation, a reaccumulation, then the breakout, another small reaccumulation, another push to all-time highs, reaccumulation, and then we had the breakout. So in both cases, you had 6 months, and at least 6 months in the prior cycle, so you had about 10 months in that. And it wouldn't be so bad to be entering again on the reaccumulation before the market broke out into new all-time highs as well. So there's plenty of time to be able to get back into the market, even if you miss that first bottom. It's just about being patient and not getting sucked into any sort of major rally into those peaks. It does start to cool off again because you've got to remember there are a lot of people that want to get out of the market as the market pushes up. There's a lot of people that said, this is over, I'm getting out. They can't handle the heat anymore and they take a loss. You know, these guys selling at 13 or 14 grand, pushing the market back down. Maybe they were people who got in at 16 to 20 grand in the previous cycle and they just took the small loss and got out of the market. One more timing question to answer before we get onto the price. How long until Bitcoin price tests old all-time highs? Let's look back at the cycle. So to, December 2017 to the previous cycle breakout is about 35 bars. So the next month was the real breakout month where we had a lot of interest in the market. Sure, there was November, which did have a ton of interest. December was the breakout. So here we're looking at 3 years between top to the breakout. Going to the previous cycle, looking at something similar, the top here to where the market broke out, you got about 39 to about 42 bars. So you had just over 3 years as well until the market broke out into new all-time highs. So worst case scenario we can see here was about 42 months. 3 years is obviously 36, so that's about 3.5 years until we break out into new all-time highs. So let's have a look at when that could actually be in case some of us bought at old all-time highs. We're going to go to 42 months. That is May of 2025. Now, if that happens, we don't have very long in the bull market to go until you reach the next peak. 1, 2, 3, 4, 5 months was the previous breakout. So that's there, 4 months. Oh, that's 4 bars, but essentially 5 months in total until that peak. Because even if you sold in March, you'd be pretty happy. You don't care about April or the next top in October or November. Previous cycle, the breakout happened around April, but the big move started around May. So to that peak, you had about 7 months. So there really isn't that much time once the market really does get a push on if there's been a long accumulation underneath the old all-time high. I hope you still got your camo on. There will be people coming after us for the lowest price possible. Now we've got to answer these 3 questions. But if you're finding value, do those things down below. Like, subscribe, bell notification icon. Still 30% unsubscribed. And we're getting to new all-time highs and the like. So at least we're doing something well. Let's crack on with the price here. Lowest price possible, not including zero. Percentage from old all-time highs. A lot of us have seen this before, so I want to add an extra touch to a lot of these questions here which come up. So we're looking at Gann extensions, retracements, and support and resistance. But we have to do this one first because of some percentages. And like I said, I'll add in my own touch here. So percentages from the old all-time highs to the previous lows, we know are about 84 to 86%. Going to this low here, there's 84% for that first range. This is for the 2017 to 2018 bear market. Now, the previous cycle, this was 2013 to the 2015 low, 87%. And in some cases, we look at the other extreme example here from the peak in 2011 to the drop in 2011. So it's about a 93.5% drop. I don't know if that's going to happen this time. I don't think it'll happen this time, but now we have those numbers in mind. Let's take a look at another percentage drop from monthly swings. This is what I got here. This is the bear markets. These are the monthly swing drops. This, of course, is not the bear market, but it was a significant drop within a bull market, which then led to a shorter move to the upside, and that rolled the market over. So I'm taking that in consideration as well. We've had 55%, 52%, 63%. Previous cycles, we've had here it's 70% the first drop, rebound, 42%, rebound, 63%. And then we started to turn over and work our way out of the lows. 53%, couple of months up, 62%. Previous cycle, starting to see a little bit of a pattern here. 70% rally, 50. So it was a 70%, then a rally, 57% down, then a rally, 65%, then a rally, turned over. You can see the market doing smaller moves, and then we start to grind our way out. So you can see about 3 significant moves to the downside, a grinding accumulation period, still with significant drops within it, and then this market starts to move out before it hits some resistance and continues on. So 3 moves to the down, accumulation, 3 moves to the down, accumulation, significant moves still happen in that accumulation. Is this going to be included in the 3 moves to the down, or do we see a rally? Let's get the brush up, and then we get another significant move down. If that's the case, then it matches up with the previous cycles. If it's not, then this may have been included as well. So we've got to keep that in mind. If we're moving using that to the downside, that's what I'm looking for in terms of percentages. We have to see where this market moves to the upside. But if we take support and resistance, and that could be in the high 20,000s, so let's use at about 28 or 29 to the downside, about a 50%, comes out at about 14,000. So just a few more percent is at 13.8, which was the previous tops. So I want to start to see some price clusters coming up here. And this is an interesting one because it's around that 13,000, which was the previous top and which was the opening prices and the closing prices on the previous cycle top as well. So you can see here, December of 2017, the market peaked into about nearly 20K, but then closed quite low at 13,900. And you see the market has been respecting that level when it did peak again and close lower. So that's why I like that sort of move to around that 13K. So this is looking at the prices, may not be the worst case, but it does have some price clusters coming in at that point, which we'll look at in just a second. So we covered the percentage from the old all-time highs, not including zero in your lowest price possible. Now let's look at the lowest price possible using some Gann extensions and retracements. And this is where it gets really, really interesting because we start to find areas within the retracement tool that the market has corrected to and not gone below, but bounce between 2 particular levels. And they start to line up with support and resistance as well. So let's take a look at those. First up, we're going to look at the extension, and we're going to use the monthly chart looking at the swings here. So if you did want to have a crack at this TIA Gann swing, link is in the video description. If you want to learn more about that and how we trade swing charts and our investing and investing long-term, trading short-term, also links are down there as well for our courses and memberships there. So the swing here is the major swing. This is the monthly. We project this out doing a 100% move. If we take this off log, you can see that this is going to be projected out at 100% to about 12,184. We need this back on log. That's for 100%. And that, of course, comes out at some other key levels within the previous accumulation zones of the previous bear market. In terms of the extensions here, their next level down is at 87.5. These aren't used so much, but there is the possibility of these being support and resistance. That's at 16,700, but I don't like this as much. It could work. I'm going to keep it there and keep watching it. But again, I want to find the worst case scenarios, and then I'll give you some of my thoughts as to where it might end up. Worst case, 125% extension from this range. So the range we're looking at is the top, and we work our way down. That would bring us out at 3,172. So it's basically this entire range down from the swing top plus an extra 25% of that range. I don't think that is going to happen. So I don't really want to use that as my worst case scenario. We're using the Gann extension here, but let's move over to the support and resistance while I have these on the chart. Now, the next levels of support and resistance are these yellow lines. So we're going to use the yellow lines and looking at our Gann swing, taking off the bar counts for now. So the swings are there. These are going to help us with significant support and resistance levels if you can't already see them on the charts just by looking at the candles. We can see that the level here at about 6,400 is a key level. So worst case scenario, I don't think 3,100 or 3,200, but let's throw up 6,700. The market did respect the $6,000 level a hell of a lot during the previous bear market, and then the accumulation zone as well. This was a really significant accumulation zone between 64.5 and 6.5 and 9,500 before we had the breakout, the retest, and then the push away to new all-time highs. And so if the market is actually strong, I can't see it getting to this accumulation zone again. If it's actually strong, if it breaks down, worst case scenario, that's a terrible sign, in my opinion, for Bitcoin price to go that low. It means something is fundamentally wrong with Bitcoin, and that investors are getting the hell out of Bitcoin because they are not even seeing support at the price of the previous accumulation zone. They're not seeing price support, price significant enough to get in before this zone is hit. So to me, that is a very critical level. If Bitcoin is to get there, I think we might really be going for that worst case scenario of a really massive drawn out bear market. Let's see what happens there and if there are any other signals that come up if in fact it did get to that point. So let's turn our attention to the retracement tools and also some more support and resistance. Now for our retracements between bull markets. Now you'll start to see the pattern here, and this is the real key piece of what I'm thinking would be a worst case, best case scenario. So I know you're here for the worst case, but let's look at what happened last time. So I've got some key levels on our retracement tool, 0.125 and 0.25. These aren't fib numbers, these are Gann numbers. This is what Gann used. He used 50%, halved that, put it to 25%, halved those as well, 125%. And you can do the same thing to the upside as well. The fib here is the 38%. Gann used a 37.5%. So you can see the bear market broke down past the 25% point, but didn't go any further than the 125. So the 0.125, 12.5%, 25%. It traded between those ranges for those periods of times. And we've covered that in the video as well earlier on about how many months it took in that range. So there it is there. Let's take a look at the next bull market up from the low in 2015 to the high in 2017. Taking a look at those exact levels yet again, 12.5% to 25%. You can see the market broke down underneath that level, stayed underneath there for a few months, didn't get as close to the level this time, so it's still a significant distance here. So from the low to the 12.5% level, there's still about a 17% gap between that area, or if you wanted to measure the other way, pretty similar, going to go 21%. Okay, so it broke under the 25%, but didn't get as low as the 12.5%, which means I wouldn't be waiting for it to hit the 12.5%. But once it's under the 25%, then we're probably trading within a very significant bottom range for the market. And the main thing is the time, knowing when and how long it could stay underneath these levels, or at least revisit these levels like it did in the COVID crash here. So that's that March 2020. It did revisit that level very briefly while everyone else was absolutely panicked. It visited that level again briefly, scoop up as much as possible, didn't stay there very long, and then came back above the support and resistance of 6,400. Very, very significant level, because even in that scary month, the market managed to close back above 6,400 very, very quickly. Trading range, up away we go again. So now that we have that there, here is the holy grail. Let's take a look at where these price ranges line up for Bitcoin right now in this current bear market cycle. You're waiting for me just to click the tool right here. There we are. We've just broken under, well, we sat on it, we broke under, then came back and closed above it. So you know that this is working at the moment. The 25% level, so that's $19,600. Where does this level come in? 12.5% comes in at $11,357. So could we see the market trade in this zone for that period of time, which we looked at the beginning of the video. That's why I spent so much time looking at timing of a market. And now we've hit the price. Everyone always wants to know what price will it get to. Look, it could be in this zone, but it could be in this zone for a period of time, and all the reasons why we're at the beginning of this video. So worst case scenario, looking back on what has happened already in only 2 bear markets. I know we need more data, which we'll get in the future, but looking back, somewhere between that 11K and 20K. So while the market is in that zone, and we've seen how many months, it was roughly 4 to 10 months it could happen, that seems like a reasonable area for a worst case scenario for Bitcoin to be in. Of course, we could go lower for a wick. We could, like a wick on a candle, we could drop past that, past the $3,000 level, looking at that extension, which I don't think will happen, but anything is possible, of course. And of course, this can take quite some time. But I think while we're trading within our zone here, that looks like pretty good buying for Bitcoin. And the zone came all the way out to about, it was March of 2023. So it seems to be a pretty good golden zone, if you will, at this level. And of course, the golden zone doesn't last forever. We need to be really onto our plans at this point in time. I think the majority of people, as always, will miss out on these opportunities. That's just how cycles work. You can see a lot of people have left the markets and they haven't done any sort of work to plan out for the next 12 months. But you guys have. That's why you're still here. You're watching, you're liking, you're subscribing, doing all those things with the YouTube numbers, supporting the channel, mentioning your comments down below. I hope you enjoyed the Bitcoin worst case scenario for price, and more importantly, time. Time is the biggest one here. It is possible to get a rough timing of the markets, which sets you above everyone else. Thanks again, guys. Till next time, peace out.